tryna take it down, place for you just scoring mines, press the bar.
All right, ladies and gentlemen, I hope you're having a wonderful day. As you see, the stock market dropped 603 points today, and this is actually one of the worst starts to the year since around 2015. Surprising to some, last year we opened the year at the bottom, so all we did was actually gain. So considering how much we were up and how much we dropped, it is not looking good. There's actually a bunch of things that I brought up at the beginning of the week. They all got worse by the end of the week. There's stuff with this coronavirus. Trump issued this weird travel ban, which I want to go over, and pretty much we had a lot of activity today. So I want to talk about what happened there, go over that, but then I also want to show you guys a little trick with option pricing so I can show you the plays that we made. So we are going to have a watch list on Sunday. We will cover this, but there was a strategy that I used today that a lot of people were confused, but essentially it's how you could short the market even when it's already down for cheap. So I want to go over that with you, and yeah, that's pretty much it. But before I get into that, I will say this. I got a lot of emails. If you guys are not familiar with the credit spreads, we have a bunch of tutorials on there, but if you made that McDonald's credit spread, it closed after hours, your buying power is showing negative, go watch my video, why I owe Robinhood $30,000. But you are in the clear, my friend. You have nothing to worry about if that has been the case with you. So don't worry, chill. It will take care of itself. That is the summary and punchline. But right off the bat, this has been one of the worst starts. Oil is reaching a low, and the biggest thing we've seen here, we've seen some of the biggest yield curve flattening that we have had since 2018. We're at levels now, even TLT's at October levels. The VIX is at levels from that it hasn't reached since October. But now what bonds have done and the amount that bonds have moved, this is actually the most it's moved even since 2015. Again, this was weird with TLT when we hit that play in August. We're getting something familiar setting up here. That mixed with everything, there is fear with the coronavirus. Now, I will say this. I did say this in response to the Trump thing. I do think this could have an effect. I've talked about the effect, but as far as a safety risk, right now it is a very, very low probability of this thing actually really spreading. I will say that here. This is why everybody's taking such precaution, because if there is a human error, if there is a slip up or event, this event could get really bad. So that is why people are very, very worried. You know, the analogy I could relate it to, and this has to do with now what happened today. Trump issued this ban. He essentially declared his own public health emergency on the coronavirus. Then they ordered a temporary suspension of entry to people who pose a risk of transmitting newly identified coronavirus. And then they implemented temporary measures on people specifically from Hubei province. And then now they're rerouting all flights from China to 7 airports. Now, it is a little weird because some people are saying that nobody wants to do the travel ban, especially U.S., because we're afraid of China in the trade war, and that should even just tell you something about the people we're negotiating with. And I think that holds some validity, but the U.S. is going to take steps to protect itself. And again, I think people are more worried about the potential of what this can be than actually what it is now. But same news, even with some of that earlier travel ban stuff, there was some news in the morning where they said that they will be banning travel. Again, it's been weird all day, but this is even what's caused us to drop. They've been saying it's a travel ban, it's not a travel ban, but it seems that the case is, you're even seeing in Italy, even countries in other places, beyond the cases rising, and now it's at above 11,000 right now and like 250 dead. But as the news kept coming out that individual countries were taking measures to ban China, and now you saw what Trump just did and what that means now for quarantines and how the next level would be border closures and stuff like that. That is what shocked the market here. So that's the first thing. But now the next thing is, even coming into this close, you are going to have China open up on Monday. They've been closed all week because of their Lunar New Year. So some people are even saying China might even open down 12%. So should be here on the watch list on Sunday. That is going to get crazy. But those are the things to watch for. And now, again, in the steps of what's going on with banning this travel, if it's not a risk, why would anyone do this? The way I see it, it's like being on a very long trip. You're already on a really good trip. You got thousands of miles to drive. The U.S. economy is good. We've been on this trip for a long time. We're doing good. But now you run over a nail. So it's like when the nail goes in the tire, it doesn't really puncture it. You don't get a flat tire instantly, but it's in there and the air starts. You're losing a little bit of air. The question is now, are you just going to try to continue your trip and drive on it and risk a blowout or a flat tire in somewhere you don't really want to be at? Or you could stop at a tire shop and then they'll go patch it up. They'll even do it for free. That's a little hack if you didn't know that. They'll take the nail out, patch it up for free, and you could be along your way. So you still have to go to the shop. You still got to get your car there. It's almost the same steps as replacing the tire, but you don't don't, it's going to cost you left, but you have to stop for a little bit to protect the future trip you're on. That's how I see all of these measures here. So that is big. That's been affecting the markets. And even then, all across today, everything got just crushed. Transports got killed. Tech was bad. Amazon and IBM held the market up. So we dropped 603 points. It's been a while. We even tested 655, but we haven't really had a day like this. Even last week, this was the largest 1% gap down move that we had even in 90 days. So this day is a little bit bigger, even though it wasn't a gap down. But we haven't seen 700 points down. We're seeing the volume kind of pick up again. We haven't seen this in months. Again, anything we haven't seen with bonds, it's been months and even years. When you're looking at just single month change, that is what is shocking. So we had the Fed and all that this week. I think next week is going to be important. Again, you could watch the videos we've talked about with the coronavirus and how it could affect things in the economic sense. But my theory moving forward here is we're going to find out in roughly about 14 to 20 days here, because right now it's already been about 15 days as the cases have been announced. Usually by day 30, this is what happened with SARS, you will see the mortality rate jump, or you will get more insight onto that next wave after it's been asymptotically, whatever how you say it, spreading. So that is the next level I'm looking for. And that is what a lot of people are going to be looking for as well. And you see now the market already broke out of the Wuhan zone. It's created now an even lower low on there. So this is telling us something about the prices. And I wouldn't be surprised to see 323 act even as a new resistance point, and even coming up here too. So we're going to have lower and lower points. So give me a standard deviation of 1. I think within the next 14 days, give or take that 1 standard deviation, we're going to see more updates, and that is where things could get real serious. And then if it does, depending on how that next move happens, that is going to affect the markets. But if we do start slipping here, I said it, I think we have a lot more downside. So, and that's simply because this has been the whole entire melt up. And now as this starts getting priced in, you're seeing how people are reacting. This whole thing with coronavirus is going to move slow. Earnings, we still have a lot more earnings, and those have been standing in. You saw what happened again with Amazon and IBM and stuff like that, keeping the market up. But I would be patient with this. I would take all the opportunities in the meantime. People ask me for the long-term portfolio. We're making a deposit. I'm looking to do the same thing. I want to spend half of my monthly allocation buying some long-terms in the first 2 weeks of February. Wait a little bit, and then buy in the last 2 weeks of February as well. Space it out 50-50 throughout the month. But it's going to be exciting. That's what we said, man. The cult got you, so make sure you guys are subscribed. Make sure we catch you on the live stream. Do not worry. But as far as everything else, let us go over that little trick I wanted to share with you. And this trick is related. Let me know if you guys want me to cover this even in a video tomorrow. I'll just share this with you quickly on here so you could really get an idea now of when the market's dropping, how do you play this? And this has to do with premium, and this has to do what I've always said, buy insurance when the house is on fire, but it's contained. So I have 2 different examples. One is going to be Facebook. This was one of the plays we made today because most of this week we did take profits, So I have been making plays, but also on the way down, we took profits on XLNX. I sold some of the Facebooks today. We cashed out on that earnings position, made like 700 net profit on there. And then I wanted my hand in the cookie jar still because I thought we could still drop. So I wanted to roll over, lower my risk, but still get a play. But the problem is now with either rolling over or playing the downside, a lot of people are starting to get panicked. You guys are, okay, I want to buy puts now. But the problem is the puts are going to be really expensive. So even further out the money plays are just relatively trash. So you could get caught up buying these, and then the minute there's going to be a bounce, you're going to get killed. So the key here now, use the change close. I have a whole video on this. Again, you guys can find that. But the key is finding the contracts, and this only applies when there is extreme volatility or the market keeps selling off, because what's going to start happening, it keeps going lower and lower, the premiums are going to be up. So everything will start to get relatively expensive, but now it's selecting which one and using your balances. And again, option trading, you shouldn't risk it, can't lose all almost financial investment, please do so financial advice, educational purpose only. And I'm saying that because you could really lose your ass doing this still. Nothing really changes about the whole program because all in all, these are purchasing really far out the money contracts. But what I'm trying to say here is go find the contracts that appreciated the least, even though the stock went down. So this morning, Facebook went down. You see these contracts were up 115%. But right here, when they were up like 70%, all of the contracts up to like the 160s, they were all up like 70%. But then you started getting down here, you would have started noticing that these contracts didn't go up as much. You're even seeing now, you see how these are down to 60%, these are at 75%, these were at 77%, and now these 140s you see here, they say they're only up 20%. That was the point. We bought these at 9 cents. I rolled over, took $700. I was like, well, I'll get time on these. I put 10 of these contracts for 9 cents. So we figured, hey, we'll have $100 in there. If it does keep dropping, we still could make some money. We won't make as much money as the big position, but I got to secure the profits. But you see here, these were the contracts that only went up 20%. And again, when we bought them, the key was finding, and it was going for the contracts that did not gain any premium. So when I bought these at 9 cents, you see at 12 cents, it's saying it's up 20%, but at 9 cents, I bought it below the opening price it was at yesterday. So even though Facebook was down 3%, I paid less than yesterday. So again, it's finding the tier of contracts that depreciated even though it went in the direction of the stock because they were still so far out and were charging so much. That's why it takes a lot for them to go up. So that's why I took Facebook now. After I rolled over, they kept going. That's when it went up. We did that play. And again, like I said, most of the plays I made today were selling profits, but I did 2 YOLOs. I did that Facebook rollover, but then I did grab these TLTs. I did the same thing here. I grabbed these TLT 151s, and I actually grabbed these at 14 cents. So those Facebooks, by using this strategy in the middle of the day, again, stocks were already at lows. They were already dropping on Facebook. We were able to still buy a put that went up 40%, and it didn't appreciate as much. And even these TLTs, by the end of the day, we're up 42% on these as well. So I got these at 14 cents, but it's the same case. You're seeing here, look at the change close. This has the smallest change close, and you could even see here, this is how I showed it live on stream. So you could even watch today's trades. Go, first link in the description, main channel. But look at all the change closes. You see how they're dropping here. But now this contract at 17 cents has a change. It's pretty much a break even. But actually right here, you see these are brand new contracts that they have 0 open interval. So that's why it's hard to gauge the price. This one was an existing contract. You put it up over the days, but we bought it literally, again, if I bought it at 14 cents, TLT was shooting up today, and I bought it at the midpoint of yesterday's price. So you could see this contract finished. We were up 40% on it, but it only closed up 11% on the day. But now let's see the other contracts. These were up 60%. These are up 70%. These are up 66%. Again, and I'm using the change close right here. So these ones were only 17%, but I think that has to do with the specific contract. But for the most part, you're seeing how all of these contracts went up 50, 60%. We were able to get 40%, but we bought the contracts that didn't move as much. So like I said, this strategy works when there's a lot of volatility and stocks keep coming down, and then it's saying, well, how can I find the cheap contracts that could gain some value without spending a lot of premium on these? Again, you could still go after the higher premium puts, but in the downside, the puts become expensive because people charge higher premiums, meaning the stocks need to drop further to reach your break even in profit. That's the same reason why some stocks that are super far at the money, or some options super far at the money, they depreciate because they were already charging such a high premium from the other shenanigans that when the stock's dropping 3%, they were pricing in 10% the day before, so they in fact get cheaper. That is how you take advantage of these. So again, even though this was a call, it's still the same concept generally with the puts because TLT is more or less an inverse. But that's a little trick. Let me know. Be careful with that. If you guys have any questions, and then again, watch that Robinhood video if you're worried about the debit spreads. But let me know. Let me know if you have video ideas for tomorrow. But I hope you had a wonderful day. Congrats to everybody who hit the Amazons and all of the other plays, the XLNX. We did 2 weeks in a row, 1,000%. So I hope you guys are ready. Hope you're in the game, baby. And I hope you enjoy your weekend and be safe and don't panic. Enjoy life. Go spread the blessings, baby. Coach loves you. Let's go.